Greg Rosica. April 15th is almost upon us, so let's get some tax tips from Ernst Young. First off, if I ask for an extension, because a lot of people, take their time, will it hurt me?
Sure. So April 15th is right around the corner, and if you don't have everything together in time, you can actually get an extension of 6 months to October 15th for when you file your tax return, but you still need to sit down and figure out how much you're going to owe, because you have to file with that extension and pay any additional amounts you might owe by April 15th.
And what about Obamacare? Clearly this is going to be more of a big deal going forward. Who's going to get hit with that tax?
So the Affordable Care Act certainly has implications to most everyone's tax return. If you're covered by your employer, you're simply just going to check a box on your tax return and you're good. If you bought insurance through the network, a little bit more to fill out in your tax return. But if you didn't buy health insurance and didn't do anything, then you may have some penalties to pay with some additional forms to fill out and remit those taxes.
And there's another relatively new tax. That's the net investment income tax. I think it's only been around a few years, but people are going to start to get hit with that, right?
That's right. This is the second year of it, so it's still new to a lot of people. The net investment income tax actually came into play as a way to fund some of the Affordable Care Act, and that's a tax on things like capital gains, interest, dividends, investment income that you have of approximately 3.8%, and also on wages over certain amounts. You have another 0.9% that you're paying on those items.
Let's get some money back. So which deductions are most overlooked?
Right, so lots of overlooked deductions. One thing we do in the Ernst Young Tax Guide is list those out. 50 of the most overlooked deductions and 25 common errors and those kind of things. They can be really simple things, like if you've sold a mutual fund during the year, make sure you're not paying too much gain, because a lot of people didn't take into effect the capital gain distributions and dividend reinvestments that they've had, and that actually decreases your gain and decreases your tax when you go ahead and calculate that. Also, if you gambled, if you hit the gambling tables during the year, you can actually deduct your losses up to the amount of your winnings on your tax return as well.
All right, finally, any final tips before you put the stamp on and put it in the mailbox? Any last-minute tips?
Don't get too excited. Don't get so excited, Greg, that you finish your return, that you just hit that send button or throw it in the mail. Put it aside, wait a day, come back, look at it. Does it make sense? Do what the IRS is going to do. They're going to compare what you put on your return to the 1099 you received, to the W-2 you received, and make sure those numbers line up. You might have transposed a number when you entered it in the computer. You might have written it down wrong. Don't rush it. Finish it, look at it, and then send it in.
All right, thanks a lot,
Greg. All right, thank you.
Thank you for watching The Street.